What's up, everybody? It's your boy Philip. So most of you probably already follow me on Instagram, and you came from the link that I posted in my story. So first of all, thanks for following me. But also, you're probably here just because you're interested in day trading the way that I do. So I'm just gonna quickly go through basically how I analyze the market in this video. But first things first, if you have a drink, raise those cups. Anyways. All right. So, first things first, this is not going to be a introduction to Forex type video. If you don't know what Forex is, do me a favor. Hold on. Do me a favor, and I cannot type today. I can't type. What is wrong with me? Okay, there we go. Go to this website. If you hold on, I'll make that bigger. Go to this website. If you don't know what Forex is, if you don't know what trading is, go to the website, because you're not going to understand a thing that I say in this video unless you go to this website. Now, I am going to explain it to people, or explain it to you in a way that most people can understand. So you'll kind of get the idea. But most of what you're going to need to know, everything that you're going to need to know about trading is on this website. Go to the website. Okay, babypips.com, and actually, specifically babypips.com/learn. There you go. Go to the website. Go to the website. Go to the website. Anyways, so I'm gonna quickly take y'all through how I analyze the market. Now, secondly, there is three types of traders. There's institutional traders, fundamental traders, and retail traders. Now, retail traders, are people that are like, oh, buy the dip, support and resistance, buy low, sell high kind of deal. That's retail. And to give you an example, this is what retail would do. Like, okay, price is going up, buy the dip, buy the dip, buy the dip, buy the dip. Oh, buy the dip. Oh, buy the as it continues down. Yeah, that's retail traders. And I make fun of them, but it's not the worst way to trade, but it's definitely not the best. Take it or leave it. That's up to you, your discretion, whether you want to be a retail trader or not. I know a lot of successful retail traders, so it's not that you can't do it. That's just one way to trade. There's the other one, which is fundamental trading, and that's literally just news. People that base their trades based off of news. I'm trying to find somewhere that a news event would have affected the. This was NFP. This might have been NFP. Yeah, I don't know. Anyways, but there's fundamentals traders. I can't really show you on this chart exactly what fundamental trading looks like, just because I have to go back in time and figure out a news event on a specific day and try to find the point where the news hit, and then it, did its thing. I can probably assume that this is probably news right here, but I can't be for sure. But yeah, news. People base their trades based off of news. That's a fundamental trader. And then there's institutional traders, and that's me. I'm an institutional trader. I trade with the big banks, with the big money, with the market, wherever it's going. That's what I do. And I just try to find the best possible entry, get in, take my profits, get out. That's what I do. I do not try to ride nothing to the moon. That's why I did not do GameStop when that was going on. I didn't do Dogecoin. I didn't do Bitcoin. I didn't do none of that, because I don't just get in trends that are popular and then try to ride them to the moon. So it works for some people, but that's not me. I'm an institutional trader, and specifically an institutional day trader. So I do things differently. So to get into the actual analysis, I'm going to go and start on the 1 hour chart, which would mean that every single one of these candles represents 1 hour worth of price action. Now, everything that you see right here is 1 day's worth of price action. So this, all this right here from about here to here is about 23, 24 candles. So this is 1 day worth of price action. So I usually start analyzing the market around 9 or 10 p.m. at night, which, as you can see, if you can go to the bottom and see this little black box, 2200, 10 o'clock. You're not viewing this in real time. You kind of are, but you're not. As you can see, it's obviously not 10 p.m. But I just hit the replay button on price so that I can show y'all how this unfolds in real time and how I looked at the market. So basically, an institutional trader trades like this: supply and demand, not support and resistance. We trade supply and demand. So this is a area of supply. This is an example. This is an example. I cannot talk today either. Example of demand. Let's go. Yeah, something like that. Same thing here, level of supply. This is a level of demand. And basically, how do I find that out? Basically, supply and demand is what you see when you see aggressive buying and selling. So as you see, this became a demand area because price aggressively shot up out of this, yikes. Out of this zone, price aggressively shot up. So this would make that a demand area. Same thing with this. This aggressively traded out of this zone, just shot down like almost like that. So this is a supply area. Same thing with this. Same thing with this. Same thing with this. Same thing with this. That's institutional trading. And I just trade the footprints. So basically, oh my gosh, I gotta get rid of all this. All right. Here we go. Okay. All right. What in the world just happened? Trying to keep my charts clean. Yeah, go to this website if I haven't mentioned that. So I basically came on the 1 hour chart and I saw that this was an area of supply and this was an area of demand. So my intention was to catch price going either direction. And that's the beauty of being an institutional trader is you can catch trades literally in any direction. You don't have to follow the buy trend. You don't have to follow the sell trend. You just have to get in, find where the bank left the footprints, follow the footprints, get the money. That simple. So how I came on the charts is basically I saw this as supply, saw this as demand. But these are two huge areas. If I was to draw this out just coming to the chart, this is how I would draw it. That's a big area. And that's a big area. So that means that the only place left to make money is this tiny little area right here. Hello? This tiny little area right here. And that's not an area that you can make decent money in. So what do? I go and I refine these supply and area zones, which that's what these gray boxes are. So I drop down to the 15-minute and I refined the supply and demand areas using order blocks, which if you don't know what that is, go to the website. But to give you a visual representation of what that would look like, it's this. That's why I highlighted this zone. This is an order block refined entry of a supply area. And this, I don't want to get rid of that. This is a order block refined entry of a demand area. Now, this personally to me is still a big area. So I go down and I drop down to the 5-minute and I try to find a order block refined entry in this demand area again on the 5-minute chart. And I found one right here. So I mark it off with this gray box. So I come back here. And basically, so the Asian session, this signifies the Asian trading session. This was the highest point it reached during the session, which was the previous trading session to the London session. And that's the session that I trade. I just said session a lot. Forgive me. And this is trading, okay? A lot of redundancy, a lot of saying and doing stuff over and over again. That's what trading is about, okay? So don't judge me. So what did I see? I marked off the Asian session highs and I also marked off liquidity. Now, how is this liquidity? Remember when I mentioned retail traders, how they trade? Now, a retail trader would trade like this. Now, I used to be a retail trader, so that's how I would know. Retail traders would do this. This is support. And this would be resistance probably. I don't know. Retail trading is always just I cannot speak, at the discretion of the trader. So this could be support. This could be support. This could be support. Whatever. But this is also support. I mean, okay, this is resistance. This is support. Sorry. So retail traders would have been like, okay, well, this is how retail traders trade. Like this is a W. So if you see a W, buy. If you see an M, sell. Obviously, they would have traded like that. Or this is a triple bottom. How is it a triple bottom? Because price hit right there, price hit right there, and price hit right there. Triple bottom. So yeah, let's buy. This is a bearish engulfing candle. So they would be like, okay, well then let's buy at the close of this bearish engulfing candle, put our stop loss below the support and target resistance. Whichever one of these you want to target. I'll just put it right there. So that's retail traders. I'm going to go ahead and label that actually. Let's go ahead and, I can't type today either. I'm terrible. So this is retail traders and this is me, or institutional traders. Forget it. I'll just put me. And this is me. So, I basically saw this. So like, now you see how basically I broke this down as a retail trader. Retail traders would have bought with their stop loss below resistance. Now, institutions and big banks are the ones that move the market. And if you've ever tried to get into trading or investing, you will realize, or you have probably came to the conclusion that the market is against you and it's a scam, yada, yada, yada. You know, you always feel like you get into a trade and you lose, like the market's against you, because in a way it kind of is. Institutions and big banks love to just eat small traders up. They don't want you to win. So they're going to make it very hard for you to analyze the market and or see where price is going. That's why if you look at this chart, if I showed you this chart, you couldn't probably tell me where price is going to go because you don't know how to trade. Go to the website and learn. You probably wouldn't know how to do this. But even if you did know how to do it a little bit, you would probably be a retail trader and probably use retail concepts like support, resistance, yada, yada, yada. But I don't do that because it's very, in my personal opinion, it's an unreliable way of trading. But I will go ahead and let you know that I do personally know successful retail traders. So I'm not saying this is the worst way to trade. It's just not the most reliable because it would take you years to learn how to accurately be a retail trader. Okay. So anyways, enough with that. So this is what I see. Retail traders would do something like this and big banks would want to come and take out their stop loss. So I'm like, okay, well, my point of interest, which I marked it off right here, 5-minute point of interest. My point of interest is right here. Their stop losses is here. That gives me a higher confluence and more confidence in the fact that this trade will actually work because big banks would want to probably come down here, take out these stop losses of the retail traders and then drive price at the very least to the Asian session highs that I marked off. So that's what we see. So it's about 10, it's literally 5 minutes till 11 at this point. I'm looking at the price and I'm like, all right, well, I'm more interested in buys and sells. So I'm going to put my limit order right here and let's see what price does. This is 11 o'clock. So 11 o'clock price comes in with all this volume to the downside and I'm feeling good because I'm like, okay, well, that tells me that the price is definitely going to come and do what I want it to do. So here it goes. And that's what it does. Comes down exactly to my entry and then makes its way up to retest the previous session's highest point. And there you go. That's how I broke down this trade. Now, most of you probably won't understand exactly what I was saying during this. Go to the website and learn. Just go to the website and learn. If you do have any questions, do let me know. I'm going to do my best to answer your questions, but most of the time I'm probably going to refer you to the website because you can learn everything at this website. This is where I learned. So I have confidence that you can learn it too. But yeah, I learned from babypips.com and YouTube, and you can too for free. So yeah, if you have any questions, just let me know. Hope y'all enjoyed the video. I'm going to try to do a few more of these in the future. I'm not going to do it for every single trade that I take, but if I just feel like it one day, I'm just going to make a video on my entries and everything and how I saw the market. But yeah, this is a quick breakdown about how I looked at this trade and took it. And I made $1,100 with this trade. And I made that in the matter of an hour and 15 minutes. As you can see, it says right there. So yeah, but to put that into perspective, I made $1,000 in the course of an hour and 15 minutes. So if I can do it, you can do it too. Go to the website, learn. Love y'all. Peace. Hope you enjoyed the video.